And we're back. Welcome back to the Auto Authorities Podcast. My name is Jay, coming to you live. Have you heard that there's a lot of banks now collapsing? It's a real thing. And when it comes to credit, I'm going to teach you on how to master the car credit game. That is right. And we're going to do it now.
Have you ever felt like you were taken for a ride while buying, selling, or repairing your car? Well, not anymore. I'm Jay, and this is the podcast to tell you what to watch out for, whether you are buying, selling, or repairing your car. With over 26 years of automotive experience, we are the Auto Authorities. This podcast is sponsored by iAutoAgent.com. We're real estate agents for cars.
Welcome back to the Auto Authorities Podcast. My name is Jay, coming to you live. We are going to be talking about how to master the credit game when it comes to financing cars. And this is going to be a pretty crazy episode. And I guarantee you, before you leave today, you're going to learn some valuable information that you probably didn't know before. But before we get going, I'd like to thank iAutoAgent, our sponsor, iAutoAgent.com. They are real estate agents for cars. When you want to sell your car and you don't want to meet strange people at strange places, you call iAutoAgent. iAutoAgent will market, list, show your car, and handle the money transaction at no cost to you. And when you're ready to buy your dream car, not only will they find it for you, they'll vet the car, they'll deal with all the communications with the dealers, and you get to just pick up your car. It's that simple. And if you're just tuning in and you want to say, hey, how can I watch the Auto Authorities Podcast live? Well, you can at the Facebook group page. The Facebook group page is called the Auto Authorities Podcast. You simply click the join group button and you can join our wonderful family. And our family is now worldwide, not just nationwide, but worldwide. And you can watch us on YouTube, the Auto Authorities YouTube page. You simply click the subscribe button and the notification button, and you'll be notified for every one of our podcasts. And then finally, if you just want to listen to us driving into work one day and you want to learn more about the buying, selling, and repairing cars, then you can go to theautoauthorities.com. That's theautoauthorities.com. And you can listen to us on 19 different channels, including iTunes, Pandora, and you can get to all those channels right there. But the other thing you can also do is you can ask questions. I will personally respond to any question that you have. That is right. I will personally respond to any questions you have. This podcast has been going on for over 2 years now. This is raw and uncut. This is not planned. And what I want to do is I want to provide you so much value. They can share this with your friends and family. And as we go today, I want you to leave comments below on anything that you may have as not a question, but maybe as something you've already experienced that you want to share with our wonderful iAuto Agent community, as well as the Auto Authorities podcast community. So let's get going. So what's happening in this world right now? Well, what's happening is banks are collapsing. I've been talking about this for a while, and now you're starting to see it. Why is it happening? Well, if you remember back the pandemic days, they were loaning money to people like crazy, and the government was giving free money. So people were running out and buying cars. Well, there's a lot of people that shouldn't have bought cars, and the banks lent the money anyway. So what happens now is back then they weren't repossessing cars. Now they are. And those repossessions are starting to hit the market right now. So what does that mean? It means a lot of things. Number one, interest rates are on the rise. Banks loaned way too much money on these cars, and they're not able to get their money back out because the market is dropping. Now, I did say last time we have a spike in the market, which is true to a certain extent. It depends on the price range of car, and this party's almost over as far as the spike goes, because the spike usually happens around tax time. So now we're going to talk about how to master the car credit game. And what I mean by that is, if you're going to go out and buy a vehicle or you're looking to buy a vehicle, I'm going to give you some valuable tips on what you can do. So when we talk about financing, it's borrowing money. Our wonderful banks loan money to us to go buy cars, to buy houses, and there's an interest rate attached to that. Well, the banks, depending on which bank it is, sometimes loan more money than they should on the vehicles because there's a value, and as the values are dropping, it's really greatly affecting the bank, especially if you don't make your payments and the bank has to take the car back and resell that car. If the car is not worth that amount of money, the banks or credit unions will lose that money. We even have credit unions coming to iAuto Agent right now trying to sell their cars through us because the auction isn't giving them enough money and they are getting hammered. So there's a couple things that are going to happen here. The lending guidelines are going to tighten up. That is exactly what I said. So as the lending guidelines tighten up, how can you prepare yourself for this big change to get your credit in order, to make sure that you know what the best interest rates are, how to find the best interest rates? So the next step is you want to know your credit score before you go in to the dealership, right? So there's some places like Credit Karma. You can even get a free credit report. Now, I will tell you right now that those credit reports that you're seeing on Credit Karma and some of the other sites, and you can go directly to the credit bureaus, that is not a car credit score. So it's different. What isn't different is what is actually on that report. And it's important for you to look because there may be things on your report that you have no idea were even there. And it could be a huge, huge hit to you when you wind up going to the dealer and finding out that you have bad things on your credit report. So what do? Well, run your report through a company like Credit Karma, or there's so many other ones. Look at your report and seeing if there's any delinquencies. Check your credit score. When you go to the dealership, they're going to use something called car credit. And car credit, usually, at least the dealership I worked at for 18 years, they use the TransUnion report. And the TransUnion is the report that they use to determine what your score is. Now, not everything is determined by score, and interest rates will vary. So as you're looking for your car, the newer the car, the lower the rate historically. So if you are thinking, oh, I'm going to save myself some money and I'm going to find some older car that's a lower price and I'm going to have a lower payment, that may not necessarily be the case. So what you're going to want to do is find a local credit union somewhere near you. Find a credit union that you like. We have many of them that we work with, and we can refer you to them and help you get the best rate for the vehicle that you're looking at. Now, I want to talk about how credit works a little bit. So when you look at your credit, there are weighted. So how can I put this? Your credit is weighted based on things that you do, and there's a certain percentage that weights your credit rating. So, for example, I'm proud to say I have like an 840 credit score, and I think 850 is as high as you can get. But if you're sitting around, that 600 mark or even lower, listen to this because this is how you could raise up your credit score. So when it comes to credit utilization is 35% of your credit score. Okay. So, um, I'm sorry, payment history is 35% of your credit score. Payment history is, do you pay your bills on time? And if the answer is no, that needs to change or your spending habits need to change. Because 35% of your score is, do you pay your bills on time? Now, let's go to the credit utilization because this is something that most people don't know. 30% of your score for credit utilization is credit utilization. What does that mean? Well, I'm dedicating this episode to my wonderful kids because when I was growing up, my parents taught me all about credit and how important it was. And that is exactly what I'm doing for my kids. Now, whether they listen to me or not is another story. But here's what credit utilization is. And I'm going to give you a story. So, my son got a job. He decides to go over because he loves Saks, he loves Gucci. And he goes and buys this. He buys two things at Saks, totaling $955.83. And he says, Dad, they gave me $1,000 to spend. And I said, Ben, they didn't give you $1,000 to spend. They gave you $1,000 worth of credit available. So what does he do? He spends $955.83. That is the absolute worst thing you can do because you only have $1,000 credit limit. You're over at 90% of credit utilization. You want to be under 30%. So, what can you do? There's a couple things you can do. You can call your credit card companies and say, hey, listen, I know you only gave me a $5,000 credit utilization, but if you're spending, say, 2,500 of that, well, you're already at 50% of the utilization. So you can ask for an increase in your credit utilization, right? Or your credit limit. So ask for 10 grand, ask for 20 grand, ask for as much as you possibly can, because now it lowers that ratio under 30%. And the lower, the better. Let's talk about the next piece, length of credit history. I'm going to give you another story. So my son says to me, I'm done with these credit cards. I'm going to shut down this account. I'm like, whoa, 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 whoa. No, no. Don't shut down the account because that will actually hurt your credit score. Even if you're not using these accounts, it's better to leave them open and just don't use them. If you're afraid you're going to spend the money, take that credit card and just hide it somewhere. Give it to somebody and say, "Hey, hold on to this for me because I don't really need this right now." So he was going to go close that account, but we all know, like, younger millennials, they don't listen very well if you're a parent. And one day you guys will realize that we actually know what we're talking about. So let's go to the next is credit mix. So if you have, let's say, a home loan, a car loan, and let's say a credit card, that's a good mix of credit. By having multiple types of what they're called as trades, then the banks basically look at that as that's your track record. And when they look at your credit, that is going to say the story of your life. And sometimes the story says, I don't pay my bills. And sometimes the story says, I pay my bills all the time. So that's why they look at all these different factors when it comes to your credit score. Now, if you're just joining us, we're talking about how to win at the credit card game, not the credit card game, the credit game, the car credit game. And what we're talking about is all these banks that are going under right now, and they loaned too much money. the cars are not worth what they're worth anymore. And now there is that gap. And in our industry, we call that underwater. Like when a dealership buys a vehicle for too much money, and as the vehicle drops in value, it's not worth that anymore. So if you're just joining us, I love you to leave comments. As you're listening to this, please leave comments. Maybe it's something that you feel is be helpful to our community. You can go to the AutoAuthorities.com, or you can go to the Facebook group page called the Auto Authorities Podcast. Leave your comments below. Share this with other people. You can go to the Auto Authorities YouTube page, and you can go to you can go to like iTunes, and you can go to Pandora, a Google Podcast. All of that, you can leave these comments because I want to help you as a community get through this. And iAutoAgent does a lot of this stuff for you too. So if you come to us with for your vehicle finder program and you need help with these credit types of questions, that is part of our service that we offer, is making sure that you're in the best frame when it comes to buying a vehicle. So we're going to get into more of this. Let's talk about new credit. That's 10% of your credit score. You got to be careful also not to open up too many cards as well. So you're going to see a lot of these places that say, oh, well, we'll give you a water bottle if you sign up for this. Some of them are even more extravagant, free tickets to things. Just be careful of that. Now, if you're an experience in credit and you've been doing it a long time, it's not going to affect you as much as if you're just starting out. You don't want to just go out and get a bunch of credit cards. One way that you can raise your credit score is you can get what you call a secured credit card, and that most banks have them. They're usually about $300. And what it does is it can help raise your credit score if you have a little lower score. So it's called a secured credit card, usually about $300. And it gives you, guess what? $300 total credit limit to spend. So in this situation, you only want to go out and buy a pack of gum or a pair of socks, something very, very small, and you want to pay it off. You don't want to let it linger. And as you're getting these credit cards too, I'm going to give you another story, is if you don't pay those credit cards off in the time limit, which they give you 30 days, then you're going to get hit on your credit. And if you pay the minimum payment, this is how credit card companies make lots of money. One of the ways they do is they charge you exorbitant interest rates, sometimes as much as 25% or more, if you don't pay any more than the minimum payment. And you will just be smart about that, because we're talking about this because I'm preparing you to go into the car dealership and buy a car. And if you don't have these things in order, it's going to be really, really painful for you as interest rates go up and lending guidelines tighten. Here's another thing that's really important that I'm teaching my kids. It is about the time you have on your job. So it's not just credit score. You could have a really good credit score, but if you've only been on your job a month, what does that tell the banks that are loaning you the money? We don't know what this guy's going to do, this gal's going to do. Are they going to keep their job? Are they going to quit? And if we loan them the money, what if they lose their job? So the longer that things have been as long as you've been on your job, and I really say 2 years is really where you want to be. But there are banks out there, if you've been on your job 6 months or a year, that you can still get credit, because not everybody has a cosigner, and a cosigner is somebody that says, okay, well, this person doesn't have credit. I'm going to go ahead and sign my name with them. And you know what? If they don't pay their bills, I'll let the banks come after me. That's pretty much what a cosigner is. Here's another thing: income. Look at what you're being paid. If you're only getting paid $9 or $10 an hour or $12 an hour, you know, you're not going to be able to afford a lot of car. I will say that right now. If you're making 24 grand a year, you're not going to be able to afford much car. And I'll tell you this, all these people that think they're going to go with these cheap older cars, get that out of your mind, because the bank's going to want to see you in a newer vehicle, because the older cars don't have warranties. So when you have a warranty on your car, that gives the bank some more confidence that, oh, okay, well, if they have a warranty, chances are if something happens to it, then they can get that paid for through the warranty versus, and then we're going to get our payment. It's all based on risk, everybody. Then we're going to look at the past credit history, which we've talked about, that your available credit, and the year of the vehicle. And I can't tell you how important that is. If you're going out there looking for a 2004, Toyota Highlander with 200,000 miles, and you think you're going to spend $5,000 and you're going to finance that, you better have perfect credit for a long, long time to get that car. And most of the time, you're not even going to get a loan for that car. And sometimes there's options of personal loans that you can do that. And another thing that you can do too is you can start a home equity line of credit. So a home equity line of credit is if you own a home, your home has equity, and that equity just sits there. So if you have, say, a $300,000 home and you only owe $200,000, well, you have $100,000 worth of equity in that home. So out of that $100,000, the bank will let you use that money on an interest-only loan, which will help your cash flow at sometimes a lower rate. It's usually based on the prime rate, and I'm not going to get into too many things about that, but it is an option. And we have clients that we recommend to go talk to their mortgage lender to get a home equity line of credit, and it's tax deductible because it is tied to your house. So whatever your tax rate is, if you're paying 30% tax rate, you can deduct 30% of that interest rate. So if it's let's just say 6%, your net effective rate will be about 4%, and that's tax deductible off your taxes. So that's a good idea. Download a payment calculator, or you can use one. A lot of the dealerships have them online. Learn what the interest rates are by going to a credit union. Don't go to like bankrate.com or some of these other ones that just sell your information. There was one in a mortgage on the mortgage side called Lending Tree. All they do is they sell your information. Find something where you're not going to have to give your information, and you can just plug in a few numbers as far as what you're paying for the vehicle, what your down payment is. And down payment makes a big difference as well of getting that vehicle. So if you're putting 20% down on, say, a $10,000 vehicle, that's a couple $1,000. That's good for the banks, because now they're only loaning $8,000 on a $10,000 vehicle. So if they had to repo that vehicle, they could get their money back. So save for that down payment. It's so important. I've been teaching my kids this. I'm like, listen, save for that down payment. Don't go running out to Saks and buying Gucci belts and freaking shoes. And just shop for those rates. And it's like with credit unions, loans can be approved like that. And many times the larger franchise dealers will work with the same credit union that you go through. So sometimes you can go directly through the bank, or you can just go to the credit union, get your check, and bring it back to the bank. That's exactly what you should be doing. And then when you're looking at these interest rates, and I really want to hit on this, when you're watching TV, and I just saw this the other day, it said 2.9%, and it was on a Hyundai, and it was $500 rebates and no payments for 45 days. Well, I've got news for you. I hit the DVR pause button, and I looked at all that small print. It is not going to be 2.9% for 60 months. it's going to be 2.9 up to 48 months. And when you do the math, you're better off taking a 5-year loan at a higher interest rate and getting the car that you want. Don't be baited in by some of these low financings. Now, if it's a 60-month, that's a different story. That's like half the interest rate. And that's what we're going to see in these new cars because these prices keep going through the roof and everybody's going to used cars right now. The other things is that most places that you do any type of financing, you're not going to make a payment for 45 days anyway. Your first payment doesn't come for 45 days. So that's not anything out of the ordinary, but the manufacturers are tricking the consumer. It's the manufacturers. It's Hyundai. It's Kia. It's not even the dealerships. It's the manufacturers. And be careful for when you do go to the dealership and you see a price and it said $1,000 financing rebate. If whatever that price is, just add $1,000 or you're going to have to go through that dealership and do the financing. And on that topic, there are some manufacturers that will give you they make you go through their financing in order to get a certain price or a rebate or whatever. And sometimes you have to keep the loan for 3 months. I'm not saying don't do that. I'm just saying find out what that interest rate is if you were to go through the dealership and the manufacturer to do the financing and do the numbers and see if it makes sense. The last thing that I want to talk about is a couple things. Number one, you could go to the credit union and many times the credit union will give you a discount on the rate if you have it automatically removed out of your account. So if you're just not writing the check and it just automatically is removed out of your account, auto withdrawal, take a look at that. It may be a good option, especially as interest rates are on the rise. And then if you have a car that you need financing on, there are some different options, and you can reach out to iAutoAgent and we can help you get you connected with some great people for that. As if you have a mechanical breakdown in your car and you have not purchased a warranty, and you know how much I preach that, purchase a warranty, a vehicle service contract, purchase it from iAutoAgent.com. You'll get a much lower cost and you will get a great policy that will actually pay. So what have we talked about today? We've talked about how to master the car credit game. We've talked about the strategies that you can use to prepare yourself before you go to the dealer to make sure your credit's in order, how the credit is weighted, and the things that you can do to get that credit score raised if you don't have the right credit, because everything counts now, folks. As the rates keep continuing to rise, as these banks keep going out of business, I'm telling you right now, there's going to be turmoil, but there's also going to be opportunity for you, especially if you have good credit. The people that don't have good credit, listen to this closely. Send this to a friend or family member. Please make some comments below. I want to hear what your feedback is on this. Are you finding this stuff valuable? Would you like to hear more? Are there any other questions you have? Are there things that you would like me to cover in future episodes? Leave the comments below on the Auto Authorities Podcast Facebook group page. Go to the AutoAuthorities.com and click the Contact Us. Anything that I can do to help you, that's what I want to do. That's why I do this every week, raw and uncut. I really enjoyed spending the time with you. I hope you found this valuable. I will see you next week.